£300 million. This is the single-year payout for a certain Denise Coates, the owner of Bet365. Just one person. To take home that much cash after paying for global marketing, thousands of employees, and massive corporate overhead means everyday punters are losing billions of pounds every year. So, who is really winning? Certainly not the punter making £20 once in a while. How many times have you heard the phrase that the house always wins? Knowing this, you may need to ask yourselves, why are you treating your investment portfolio like a night out at the casino? Welcome back to the Silver Fox Insights channel, where we simplify investing, markets, and wealth building with clarity, not complexity, and understanding before action. This is episode 9 of our series, where we break down the psychological barrier between gambling and investing. Gambling is a zero-sum game. Essentially, you place a bet, you pray for luck, and mathematically, the system is designed for you to lose over time. However, you don't have to take my word for the mathematics of this divide. To see how brutal this is, we only need to look at a very successful single private company profile, namely Bet365. Cautions displayed in Bet365 advertisements declare, amongst others, chances are you're about to lose. And you win some, you lose more. Those are scary thoughts. Yet, gamblers seemingly dismiss this and continue to gamble regularly. Is it driven by the dopamine rush of a 1 in 5 or 10 win? They prop up the salary and annual dividends that Britain's richest women commands. Would you treat your investments based on similar slogans? You wouldn't and shouldn't. True investing is the exact opposite. It is a value creation game based on economic growth, research, data, and the twin vulture values of patience and discipline. Yet every day, millions log into asset markets looking for a quick £20 win, of which crypto is a good example. Although I have embraced crypto wholeheartedly, many people still treat it as a get-rich-quick scheme. Real investing is long-term. Punting in crypto and hoping for the next Bitcoin phenomenon is not the answer. Let's take a look at how this trap expanded from sports betting directly into the wild and wonderful new digital frontier of investing. We have all been told that the house always wins, seemingly because the owner is visible, calculated, and taking home hundreds of millions of pounds while everything is carefully monitored. In contrast, what happens when the digital casino expands? The asset becomes intangible, and the owner completely vanishes? Enter the wild world of cryptocurrency, along with its mythical creator, Satoshi Nakamoto. We see headlines such as the crypto twins becoming overnight billionaires off Bitcoin. It made me ask, was that pure gambling or some form of a highly insightful investment strategy? I know the answer. I'll leave it up to you to draw your own conclusion. With thousands of tokens completely disappearing over the last few years, the line becomes blurry. Enter the internet influencer. They are a dime a dozen who flash controversial charts and scream about the next 100x token, and in my opinion, purely hunting for clicks. Here's the secret. Most of them probably don't even own the digital or traditional assets they push. They are simply acting as the digital casino promoters. And if you let them dictate your portfolio, you aren't investing. You are playing a slot machine designed by someone else. Listening to their jargon or believing the 50-50 misnomer that you can only either win or lose. The belief that there are only two outcomes is based on the theory behind a flip of a coin. In reality, it is not so simple. How come, if you understand roulette, can the ball land on either black or red 20 times in a row if there are only two possible color outcomes, apart from zero? I like to put it down to Murphy's Law. Accepting that the law of only two outcomes existed, if you lost money on your first trade, you would simply place your house on the second trade, as the law indicates that the next trade must have a positive result if there is a 50-50 chance of success. Doubling up is another strategy that is often used in gambling. The assumption behind it is that the tide of your losing streak will eventually turn and you realize a big win. This is not how finance nor gambling works. I have seen this happen at roulette tables. 20 double-ups and no win, just ever-increasing losses. And eventually the gambler walks from the table, head down, heart sunk, and empty pockets. Similarly, I was fortunate to sell 97% of my crypto holdings near the top in July 2025. However, I misjudged the downward movement as simply a correction before a continuation of the rapid rise. Boy, was I wrong. It wasn't a case of impatience. Fear of missing out on the next rally kicked in. The decline still continues, day after day, week after week, and month after month, 11 months later. No respite, despite influencers and so-called experts still spouting ridiculous highs. I treated this as an accumulation phase where I was dollar cost averaging. It has been a difficult but well-learned lesson. I will continue with this strategy as I am looking long-term, not at the short-term bubble. Remember, anything good in life takes patience and effort. When you look at the sea of fruitless tokens and loud influencers that abound, one may simply write the whole thing off as a scam. I know, as that is exactly what I did. When I look at my own investment background, for years I was fiercely skeptical of crypto. Coming from a successful background in traditional finance, I couldn't grasp investing in something completely intangible, something I wasn't able to touch. Someone dreamed up a currency called Bitcoin, and now it is supposed to be the new means of exchange. This was a person, not a central bank or government, a person. Was this really going to change the world order as far as money was concerned? Nobody even knows who they are, or whether Satoshi actually exists, and I couldn't physically hold or safeguard it. It felt like a gamble. That said, after several chats with my son, I came to the realization that the global financial landscape was evolving rapidly, and it wasn't waiting around for my permission to change. However, I didn't rush in. I initially made the mistake of listening to influencers promoting their own positions or chasing clicks. Fortunately, the vulture's patience and discipline kicked in. I spent 2 full months undertaking my initial deep dive research without making a single trade. I put in the hard yards. My maiden exploratory trades weren't gambles, but calculated, thesis-driven allocations. Today, digital assets serve as a growing core and structured complement to my traditional investment portfolio. I stopped gambling on noise and flashy hype and started investing in data. Due diligence served as the base. Most people probably think due diligence is boring. I disagree. Learning to self-enrich is an adventure. If that level of deep dive research sounds incredibly dry or intimidating, I want you to look at it through a completely different lens. Think back to when you first learned to ride a bicycle. You were nervous. Your hands were probably shaking, and it was terrifying. However, once you mastered balance and began doing tricks to impress your friends, it was exciting. Investment is almost identical. Once you get past the starting block of learning the basics, a tremendous landscape of financial adventure opens up. I hold numerous qualifications, many of which I don't use today. However, here's the ultimate truth. No one can ever take those qualifications away from me, whether I use them or not. Once that knowledge is in your head, it's yours forever. You become the investor, not the gambler. Despite all the research in the world, the biggest danger to your portfolio isn't the market. It's possibly your own mind. Which is why in my next video, video 10 of this series, we are breaking down the 7 psychological investment traps that cause smart people to make terrible trades. Stop letting people who are only after your clicks control your financial future. Do your homework, build your base, and protect your capital. If you missed video 4 on 7 macro investment mistakes, revisit it right here. Please like, subscribe, and share, as it really helps the channel reach as many people as possible who could benefit from the financial insights. This is Silver Fox Insights, where smart investing starts with patience, discipline, and perspective. I'll see you in the next video.